Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of December 16th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, last week mortgage rates did move higher. If you look at the bond chart on the screen, you can see they tried to recover but then sold off again. So mortgage bonds have resumed their long-term trend of moving lower, as you can see from the arrows there. Now, Friday we did have a green candle, did try to hammer out a bottom. So we are going to cautiously recommend floating your Delaware mortgage rate to start the week. But be careful, because if you look at the long-term picture, look at the big chart there, you can see the big blue line is the ceiling of resistance. It's real tough for bonds to break above that. They've hit that and sold off. And the dotted line shows the long-term trend. Mortgage bonds are going to sell off and move lower, and interest rates are going to move higher. Everyone's predicting rates to be in the 5% in 2014. And then the big red arrow at the bottom, that is the next floor of support. If mortgage bonds start selling off, we don't have a clear level of support to all the way down there, which is really about 5%, which is where we think rates are heading. So you can cautiously float short term, but long term rates are moving up, so be on guard. Soon, if the bond does shift sentiment, you would quickly switch to a locking stance. Now, in economic news, the U.S. Congress looks like they've hammered out a budget deal for the next 2 years to avoid another government shutdown in January. Now, the budget is supposed to reduce the deficit by $23 billion, and it does not raise any taxes. It sets government spending at $1.012 trillion for the current fiscal year through September. And the $23 billion savings on $16 trillion in debt, not really that much to celebrate, but Congress seems to think they did a good job there. The budget plan includes higher fees for airline passengers, changes to government pensions, and increased annual discretionary spending. It did not include another extension of the jobless benefits. So that's a budget in a nutshell, expected to go to the Senate this week and be passed, and then for Obama to sign off. In other economic news, retail sales for November 2013 came in better than expected at 0.7%. They're only expected to be 0.6%. So that is not bond-friendly news. Stock market rallied on that news because a better economy pulls money out of bonds into stocks. And we also saw a read on inflation on Friday. The producer price index came at 0.1%, and year over year it's at 1.3%. That's a measure of inflation at the wholesale level. Very, very tame inflation. That's bond-friendly news because inflation is the enemy of bonds. So that's why it helped Friday. The bond did rally slightly, and we are looking to cautiously float. We saw weekly initial jobless claims come out on Thursday, and they surged higher by 68,000 claims. From 300,000 the previous week all the way up to 368,000 claims for the week. So that number may give the Feds pause, and we don't think they're going to taper this month, but their meeting is this week. We do expect them to push tapering until 2014, maybe March. So the huge jump in jobless claims. And then in the housing news, the FHA lowered the loan limits for 2014. The loan limits will be calculated based on the median home price for that region, using a calculation of $115,000, the median home sale price. And the lowest maximum limit is set at $271,050. So for Delaware, Kent County is going to drop to $271,050 is the limit. Newcastle County is going to drop to $379,500, and then Sussex County is going to drop to $316,250. If you go to the blog, there is more information on the FHA loan limits for 2014. And then CoreLogic reported that foreclosures for October 2013 were 48,000, which is down 30% from October 2012 with 68,000 foreclosure. Foreclosure inventory declined by 28% this year, and the rate of serious delinquencies is at its lowest level since November 2008. This is all good news, but we still have a long way to go because there's still almost 900,000 properties across the nation still in foreclosure, which is about 4 times the normal. And then some more housing news. FHFA announced it will increase the G fee for all conventional loans delivered to either Fannie or Freddie Mac. The G fee is basically a hidden tax on conventional loans. Congress figured out they can fund things such as health care bill through the increase of this G fee or this hidden tax, and they can tell Americans they didn't raise taxes to do it. But basically they are taxing Americans to get conventional loans. So next year, March and April, you're going to see home loan rates jump on conventional loans to cover this increase in the G fee. Now, in the local news, the next free first-time homebuyer seminar is in Dover, January 11th, and that is Saturday from 10 a.m. to noon at the Holiday Inn. And then the next one in Newark is January 18th. That's a Saturday, and that is at the Christiana Hilton Hotel from 10 a.m. to noon. You can register for either event by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerseminars.com. Look forward to seeing you guys next week.